Hello everyone, welcome to Commerce Logic. Today we are going to discuss about procedural compliance part 1. So in this first we are going to study about what is procedural compliance. Simply, procedural compliance is being aware of provisions of the Income Tax Act. I mean to say is that we should be aware of the provisions of Income Tax Act. If you are aware of the provisions of Income Tax Act, then it will help you to pay tax on time. Then next, in order to pay or in order to obtain the knowledge regarding the provisions of Income Tax Act, these are the things we need to know first. The first one is permanent account number. We say PAN generally. So these are the important points relating to PAN. So first point under this is it is a 10-digit alphanumeric number issued by IT department. IT department will issue this number. It contains 10-digit alphanumeric number. Next, its section is 139A. Then, it is a 10-digit alphanumeric number issued by IT department. The structure of 10 characters of PAN number is as follows. First one, first 3 characters represent alphanumeric series from A to Z, triple A to triple Z. Second one, the fourth character of PAN represents the status of the PAN holder. That is, P stands for individuals, C stands for company, and H for Hindu undivided family, B for body of individuals, and G for government agency. J stands for artificial judicial person, L stands for local authority, F is for firm or LLP, and T is for trust. These are the various alphabets uh, which is the fourth character of PAN number. And next, fifth character is the first character of the surname. Next four characters, that is 10th character, is alphabetic check digit. The next, what is the procedure to apply for PAN? Let's see it. IT department has authorized UTI Infrastructure Technology and Services Limited and NSDL to set up and manage PAN Services Center. These are the two authorized agencies for the purpose of application of PAN. So these are the two companies will manage PAN card services by establishing PAN card service centers. Then you can fill the form 49A or 49AA. Quoting of PAN is compulsory. Quoting of PAN is compulsory in following situations. The first instance is if the sale or purchase of any immovable property valued at rupees 10 lakhs or more. Then again, valued by the Stamp Valuation Authority under section 50C at an amount exceeding rupees 10 lakhs. That means if purchase or sale or stamp valuation, if the amount exceeds 10 lakhs, then quoting of PAN is compulsory. Then next, time deposit exceeding 50,000 in banks. Deposit limit exceeds 50,000, then quoting of PAN is necessary. Then next, contract of sale or purchase of securities exceeding 1 lakh. Then if you make a contract regarding purchases or sale of securities, if it exceeds 1 lakh, then PAN is mandatory. Then payments to hotel bills for bills exceeding 50,000 at any one time. If a limit of 50,000 crosses, then PAN is mandatory here. Deposit in cash aggregating rupees 50,000 during any one day. So if any transaction happens or exceeds 50,000 rupees, then we can understand that quoting of PAN is compulsory. Now we'll see. And one more thing, for debit card and credit cards also PAN is necessary. Then for acquiring RBI bonds greater than or equal to 50,000. This is one more thing. For obtaining or for purchasing RBI bonds exceeding rupees 50,000, PAN card is necessary. Then payment of life insurance premium more than 50,000. If an insurance holder pays a premium of rupees more than 50,000, then quoting of PAN is mandatory here also. Then its assessing officer allots the permanent account number has been assigned. Who will allot this permanent account number? IT department will allot. In that IT department, assessing officer will be allotting you the permanent account number, that is PAN number. So here these are the various circumstances where quoting of PAN number is mandatory. Now come to Aadhaar number. First, it is mandatory when transaction exceeds limits. Similar to PAN card, this also workful to Aadhaar card too. Then power delegated to central government. Penalty for not complying with the provisions relating to PAN or Aadhaar under section 272B for rupees 10,000. If you are not following rules, that is procedural compliance rules regarding quoting of Aadhaar number or PAN number, you will be penalized up to rupees 10,000. Then power delegated to central government. It can pass the order by the official notification. If the power is delegated to central government, then automatically it has an authority of allotment of PAN number. That means it can pass the order through official notification. That is, it applies to assessing officer for the allotment of PAN. And penalty of 10,000 rupees is impossible under section 272B for failure to comply with the provisions of section 139A. Failure to obtain, quote or authenticate PAN or hold. Then next, it is about TAN. TAN is nothing but tax deduction and collection account number. TAN is also 10-digit alphanumeric number. Every SSE is liable to deduct TDS, that means tax deduction at source, and collect TCS and required to apply for a TAN number. Shall code this number in all TDS and TDS payments and any other communication regarding TDS with IT department. The person who wants to obtain his tax collected at source, first he needs to file TDS. To file TDS, this TAN number is required. So here TAN is nothing but tax deduction and collection account number. Then total 10 digits. It's of 10 digits. First 4 are alphabets. Next 5 digits are numbers. Last digit is random alphabet. First 3 alphabets of TAN represents the jurisdiction code. Fourth alphabet is initial of the name of the TAN holder, which can be a company, firm, individual, etc. For example, TAN is allotted to Mr. Raju of Delhi may appear as under DEL. It is a jurisdiction area. R. It is the first letter of his name. Then 1, 2, 3, 4, 5 numeric. Then Last letter is L. It is random alphabet. So this is the procedure for getting TAN number. Then tax audit, it is under section 44A B. It is one of the additional point here. Then tax deducted at source. What is TDS? Tax deducted at source. It is deducted from the payments made by the individuals as per Income Tax Act 1961. See, according to the act, if the individual makes any payment, then from that payment IT department will make TDS, that is tax deducted at source. Various types of rates of TDS deduction are present. Focus on pay as you earn. If you earn, then you need to pay tax on your income. That is what he is saying here. TDS is a direct tax that is collected from the people at the time of payment of salary, rent, commission, etc. During these payments, TDS is to be done. The TDS is collected and then transferred to government account. Of course, government will collect and it is transferred to government account. The full form of TDS is tax deducted at source. In the heading itself we have studied. Then the CBDT is nothing but Central Board of Direct Taxes, governs provisions of TDS under the Income Tax Act 1961. You need to be aware of the provisions of TDS here. The deductor is referred to the person deducting tax and deductee is a person from whom the tax is deducted. This is the difference between deductor and deductee. Then TDS payment is made at a specified rate prescribed. TDS will be deducted only at a prescribed rate and not of willing. And no tax is deducted in case of amount does not exceed the specified limit. If the transactions amount exceeds specified limit, only then the TDS is deducted. If not, it is not deducted. Now we'll see objectives of tax deducted at source. We'll see what is the first objective. First one is government requires funds throughout the year. So if it collect tax deducted at source, then it will get funds throughout the year. And government also requires some fund to run the government smoothly. So to run the government smoothly, it should require some amount. So it is securing or it is acquiring some amount in the form of tax deducted at source. Now we'll see what is the second objective. To enable the salaried people to pay the tax as they earn every month. So salaried people will pay tax every month. To check that tax payment is not avoided by unscrupulous income tax assessees. If tax deducted at source is done in a regular way, then individuals have no choice of avoiding this tax payment. Then scheme of tax deduction at source. These are the various steps for tax deduction at source. First, the payer need to apply for TAN number, which we have discussed earlier. Then he is to deduct tax from the income or payment mentioned in the various sections under sections from 192 to 196D. You have to follow these sections. Income tax will be deducted from the incomes where individual earns. That is what this point says. Then amount to be deposited within stipulated period of time. There is some prescribed period of time. Within that period only you need to deposit the amount in as TDS. Then TDS returns preparation. Then you need to file TDS. Then the payee should ascertain certificate of tax. After that, the payee will ascertaining a certificate of tax. Now we'll say about salary, that is about 192. Section 192 says an employer paying income chargeable under the head salary is responsible for deducting TDS also. So, on an average rate of income tax based on prevailing rate during particular financial year. So, what is he saying here? Any person who is taking a salary, who is entitled to taking a salary, also entitled to deduct TDS at the end of the financial year. TDS on salary is equal to estimated total tax liability during the previous year divided by number of months employment during the previous year. If you substitute the amounts in this, then you will be obtaining TDS on salary. Then this is also includes, so this is calculated after deducting surcharge and health and education cess if applicable. Then premature withdrawal from employees PF scheme. In this 20% DTS is deducted. Then interest on securities, this is under section 193. If 10%, if no PAN, then 20% TDS. Actually 10% TDS is to be filed on interest on securities. If not, 20% of TDS is deducted if there is no quoting of PAN. Then TDS on dividends. On dividends, 10% of TDS. Then interest other than interest on securities. Interest on securities we have studied in the second point itself under section 193. Then other than that interest on securities, various kind of interest. Section 194A, 10% of TDS. Thank you for watching. Please like it, share it and subscribe the channel. And part 2 will be continued in the next video.